The secret to capital mobilization of billionaires. I want to ask you a question. What exactly are stocks? When you buy stocks, do you really understand what you are buying? There are many investment tools in the world, so why do you choose stocks? If you have never thought about these questions, then you are very likely to be a newbie in the stock market. Many people know the concept of buy low, sell high, but the money earned never really ends up in their pockets. Why? Because they get stuck in the vicious cycle of speculation. Earning, then losing, trying to recover, then losing again. The result is they never get rich. I have witnessed my own relatives sometimes making tens of thousands of dollars from stocks, yet their lives remain poor. Because that profit money does not stay with them. They are like gamblers in the market, called stock speculators rather than investors. So why do companies want to list their stocks? In a conversation with a financial company director, someone who specializes in helping businesses go public, I began to understand the truth. The dream of many entrepreneurs is to get their company listed on the stock exchange, because that is the pinnacle of capital mobilization. We mentioned a classic book, The Intelligent Investor by Benjamin Graham, Warren Buffett's teacher. The book not only teaches investing, but also clearly outlines how the capital market operates. When I first started my business, I read it without understanding. Now, reading it again, I have a new insight. It is the mindset for getting rich through finance. From there, I understood that the capital market is where supply and demand for capital occur. If I open a winery and need to hire people, I go to the labor market. Need tables and chairs, I go to the furniture market. Need money to produce, I enter the capital market. But just because I need money doesn't mean the bank will lend it. I need collateral. For example, if I have goods worth 5 million VND, the bank values them at 4 million and lends me at 8% interest. That is a secured loan. But what if I want to borrow without collateral? I gather 100 relatives, each contributes 40,000 VND to have 4 million. I print promissory notes promising 6% annual interest. That's issuing bonds. That is the first way to mobilize capital, issuing bonds. But if I still need more capital and cannot borrow anymore, I turn to strangers, investors. A person named Min agrees to invest 4 million in my company in exchange for 20% ownership. That means I have sold shares to raise capital. This is the second method, raising capital by issuing shares. So when the company makes a profit, who gets paid first? The bank, secured creditors first, then bondholders, unsecured creditors, and finally shareholders, owners of the company. That is the principle. Pay debts first, share profits later. When my company grows strong, I hire people to stand under the tree root where many wealthy people gather, holding boards with company information, looking for investors. Later, many people copied this. Seeing a business opportunity, I set up a blackboard listing companies needing capital. Anyone wanting to invest could read the board and contact those companies. I charged a brokerage fee. Later, I opened a company specializing in this work. The stock exchange was born. So, a business has two ways to raise capital. Bonds. Creditors must pay interest. Stocks. Shareholders share profits, if any. Stocks are essentially business partnerships. If you buy Apple stock, you are a shareholder of Apple. Even if very small, you still have the right to receive dividends if the company pays them. Stock prices fluctuate due to human greed and fear. When the market is excited, prices rise. When the market panics, prices fall. That is the psychological rule governing the market. There are two investment schools. Trend investing, following the big money flow. They buy when the big players buy, sell before they sell. Value investing, like Warren Buffett, buying companies with real value and holding long-term. The common point, both understand the essence of stocks, owning a business. When you buy stocks, you are partnering in business with that company. You must understand the business model, profits, and reputation of the company before investing. Never buy stocks of a company you do not understand. And remember, the best investment is investing in your own intellect. When I started my business, many people mocked and laughed, but I did not argue. I knew they would become spectators of others' success. Today's era is the era of intellect, individuals, and the internet. You cannot become rich if you do not dare to think, learn, and act. I share this video not to persuade you to invest, but to help you understand. If you want to become a successful investor or entrepreneur, you must clearly understand the nature of the capital market, stocks, and bonds. That is the key to capital mobilization, the secret of billionaires. If you find this video valuable, please subscribe to the channel, hit the notification bell, and share it with those who need it. I sincerely wish you soon achieve financial freedom. Alright.